Welcome back this weekend. Mark Gold of StoneX Group, as well as Brian Splitt of agmarket.net. Coming right off of Veterans Day on Friday. Brian, you served in the Marines, still a proud Marine. We want to salute you this weekend as well.
Yeah, thank you, Tyne. And I'd like to wish a happy 247th birthday to all my fellow Marine brothers and sisters.
Definitely. Thank you, Brian. Well, we look at this USDA report this past week, did see an adjustment to yield, actually bumped up the yield for both corn and soybeans. Mark, was that a surprise to the market?
Well, I think it was. But first, I want to say thank you to Brian for his service. I looked up his record, and it's quite a distinguished record out there. And I sincerely appreciate the time you spent in defending our country. Getting back to the reports, 0.4% increase in corn and beans, a little bit of a surprise. I think the bigger surprise was that they didn't lower export projections. I think that's coming down the road. But I didn't see anything friendly in these reports. I was surprised the beans acted as well as they did. But today, on Thursday, they gave back, quite a bit of it.
Yeah, and when you look at the adjustment to yield, Brian, maybe a little bit of surprise to some of the market there, but does it change the balance sheet much when you add that yield back in?
No, Tyne, it really didn't change the balance sheet as of right now very much. The small increase in yield was slightly offset by an increase in the feed residual demand in that category. But I think the problem here that we have to realize is that we had a bullish September WASDE report. We had a bullish quarterly stock report at the end of September. We had a bullish October WASDE report. And the market got tired. We really just couldn't get through $7 on the future side. And so I think you have to really wonder what else is there right now to get the market to push through there. So as we approach year end, the fund manager may decide to lighten up. They've been long corn for quite some time. They have not seen any new highs being made recently. And they may let this market come back down, retrace some of this rally that we had from the July low to the October high. The 635 area would be about halfway into that rally. You've got a gap at 631. So these are going to be some potential targets. And then we'll see what the fund manager wants to do as we approach the January final production numbers. But we're not going to get any new data from the USDA likely in the December WASDE report. So we've got what we're going to work with for now for about the next 2 months.
Mark, you mentioned it, no change to exports. You think that's coming down the road. Which commodity do you think has the most room for change, up or to the lower side from USDA?
Well, I think for the time being, the corn, we've seen some little bit of pickup in Mexico, which is good. But overall, I look at beans. We're losing our export window here almost daily. We can't get beans out through the Gulf. They're trying to get them out through Houston and Alabama. Some are moving west, going out to the Pacific Northwest. So, the beans are still pretty tight, but, on the carryouts, we went from a 200 carryout to a 220. It's a 10% increase. You look at the world stocks of 1.7 million metric tons. That's a fairly big increase. I believe this Brazilian crop is going to be a monster unless something really changes. Argentina's had some good rains. Funds are long 240,000 contracts of corn, 100,000 beans, 100,000 oil. I just don't see where we're going in this thing unless it's to the downside. We're going to need something to shake. If Putin signs this agreement over the weekend, I don't see much hope. You had the dollar down over 2 full cents, and we couldn't rally a week. So to me, the market is telling us, like Brian said, that it's tired, funds are long, and I think that's an issue.
Well, Mark doesn't sound very bullish, Brian. So when you look at the supply and the demand, those factors right now, not even looking at the outside markets, are you concerned about significant downside risk?
I'm more concerned about significant downside risk in the soybeans than I am corn. And I'm not going to say that corn can't go down. And I think we're probably going to continue to grind lower here in the short term. But when I look at, as Mark had mentioned, the size of the upcoming Brazilian crop, Argentina getting rains recently, and we're going to have an issue here coming up very soon where I think China's been doing the buying that they need to do to get them to the South American harvest. And once that crop is online, we may experience 2 quarters of no export sales for soybeans once that the Brazilians have that crop available. And I think you're going to have an issue with not only the futures market, but I think this strong basis that we've seen develop through harvest is going to evaporate very quickly as well. So I think you're going to have a compounding issue of a lower futures market and a weakening cash market at the same time.
Speaking of that basis, we're also keeping an eye on the rail situation and what could happen a week from now as we enter that deadline for a possible rail strike. So we'll talk about basis, we'll get into crypto. We have a lot more to talk about with Mark and Brian. So stay with us this weekend. We'll have more U.S. Farm Report when we come back.
U.S. Farm Report is sponsored by the National Pork Board. National Pork Board is getting the word out about real pork with a myth-busting campaign that shows consumers the story of real pork on the farm. Visit pork.org/wecare to learn more.